Hello everyone. So today we'll be taking up with question number 19 of internal reconstruction, which was asked in April 2017 exams. Have a look at it, everyone. The following are the liabilities and assets of PQR Limited as on 31st March 2019. Now, equity share capital of rupees 10 each, fully paid up 45 lakhs. So 45 lakhs divided by 10, you can say there are 4,50,000 equity shares. 10% preference share capital of rupees 10 each, fully paid up 15 lakhs. So 15 lakhs divided by 10, you can say there are 1,50,000 preference shares. 10% debentures of rupees 100 each, 20 lakhs. So 20 lakhs divided by 100, you can say there are 20,000 debentures. Outstanding interest on debentures 2,40,000 and creditors 15 lakhs. Asset side we have goodwill, land and building, plant and machinery, furniture and fixtures, stock, sundry debtors, cash and bank. And this profit and loss on asset side means it is loss. Okay, debit balance means it is a loss. Assets always have debit balance. Total 97,40,000. The following scheme of reconstruction has been duly sanctioned by all concerned. I told you reconstruction means either external or internal. In external reconstruction, new company's name should be given. Here, new company's name is not given, means it is a question on internal reconstruction. Now, in this chapter, we don't read the adjustments in advance. We directly make the formats and solve it. I have told you earlier also. So, here's the main question asked. Prepare capital reduction account and pass necessary journal entries to give effect to aforesaid scheme. Balance sheet is not asked. Fantastic. In exams, it is a 15 marks question. Balance sheet is not asked means becomes very small and simple. All of you make a format of 1.5 page of journal entries and around 10 lines capital reduction account. Okay, pause the video and make the formats. 1.5 page journal entries and 8 to 10 lines capital reduction account. Do it fast, everyone. I hope all of you have done the formats. So have a look at it now. First adjustment. The equity shares of rupees 10 each were reduced to the denomination means face value of rupees 5 each, fully paid up, means you can say this is the new face value. So in case of equity shares, the face value has been decreased, has been changed from 10 rupees, the old face value, it has been decreased to 5 rupees, that is the new face value. So what journal entry we will pass if face value is being changed? Okay, we have done it earlier also. Equity share capital with old face value, that is rupees 10 account debit. I repeat, equity share capital with old face value, that is rupees 10 account debit. An amount, there are 4,50,000 equity shares. So 4,50,000 into 10, 45 lakhs. And 2 equity share capital with new face value. Okay, so 2 equity share capital in bracket new face value, that is rupees 5 account, an amount 4,50,000 into 5, that is 22,50,000. And 2 capital reduction account with the amount what they have sacrificed. Okay, it is decreased from 10 rupees to 5 rupees, means they have sacrificed 5 rupees, that will be transferred to capital reduction account. So again 4,50,000 into 5, 22,50,000 will be transferred to capital reduction account. Being rupees 10 equity shares reduced to rupees 5 each. Okay, being rupees 10 equity shares reduced to rupees 5 each. Now, the posting. To capital reduction account 22,50,000 means in capital reduction account we will write on credit side opposite account by equity share capital account 22,50,000. Now, second, 10% preference shares of rupees 10 each fully paid up were reduced to 12%. Okay, from 10% the rate of dividend we are increasing to 12%. Preference shares of rupees 10 each, 5 paid up. Here face value is not changed. Paid up value is only changed. Okay, paid up value from 10 rupees is decreased to 5 rupees. So here we will not debit old face value and credit new face value. Directly 5 rupees what they are sacrificing from 10 fully paid they are decreased to 5 paid up, means whatever 5 rupees they are sacrificing straight away we will transfer to capital reduction account. However, since from 10% they are changing to 12%, so this we will have to bring in our books of accounts. So we will write the entry 10% preference share capital account debit. But no need to write face value in bracket. Okay, 10% preference share capital account debit because face value remains 10 rupees only. Amount 1,50,000 into 10, 15 lakhs. Okay, 1,50,000 into 10, 15 lakhs. I repeat, face value is not written in bracket because face value is not changed. But from 10% they are made 12%. So do 12% preference share capital account to 12% preference share capital account. Here also will not write the face value in bracket because it remains 10 rupees only. However, the paid up value becomes 5 rupees. So 1,50,000 into 5, 7,50,000 is being credited to share capital account. And remaining 5 rupees what they sacrifice, we transfer to capital reduction account. 1,50,000 into 5 rupees what they sacrifice, that is 7,50,000. Okay, I repeat, rupees 10 and rupees 5 are not to be written in bracket because face value is not changed. However, we are passing this kind of journal entry because from 10% the dividend is increased to 12%. So new ledger account is to be created in the books. 10% is to be closed and 12% is to be created in the ledger books. Being 10% preference share capital converted into 12% preference share capital and rupees 5 paid up. Okay, being 10% preference share capital converted to 12% preference share capital, comma rupees 5 paid up. Now two capital reduction accounts. So in capital reduction we'll write on credit side opposite account by 10% preference share capital account. Amount will be what they are sacrificing 7,50,000. Okay, amount will be 7,50,000. Next, adjustment 3. The debenture holders agree to forego means sacrifice the interest outstanding on debentures. What is the interest outstanding on debentures? 2,40,000. They have sacrificed it means straight away it will be transferred to capital reduction. So outstanding interest on debentures account debit. Okay, outstanding interest on debentures account debit 2,40,000 to capital reduction account 2,40,000. Directly what they have sacrificed will be transferred to capital reduction account. So outstanding interest on debentures account debit 2,40,000 to capital reduction account 2,40,000, being outstanding interest foregone or sacrificed by debenture holders. Okay, being outstanding interest foregone or sacrificed by debenture holders. Now, to capital reduction account means in capital reduction we will write on credit side by outstanding interest on debentures account $2,40,000. Okay, I hope everyone is able to follow this. Next, land and building were revalued at rupees 30 lakhs. Now, land and building is 25 lakhs, revalued at 30 lakhs. So, profit of 5 lakhs will be credited to capital reduction account. Okay, whereas plant and machinery to be written down to 20 lakhs from 30 lakhs written down to 20 lakhs means here we have to utilize capital reduction in writing of the plant and machinery. So two separate entries will come. In case of land and building, the value is going up. So the entry will be land and building account debit. Okay, in case of land and building, the value is going up. So land and building account debit to capital reduction account. Now, what is the increase in the value? 5 lakhs. From 25 lakhs, it has gone up to 30 lakhs. So 5 lakhs will be transferred to capital reduction. Being increase in the value of land and building. Okay, being increase in the value of land and building. Now to capital reduction account. So in capital reduction, we will write on credit side by land and building account $5 lakhs. Now next, plant and machinery from 30 lakhs, it has gone down to 20 lakhs. Means we have to write off 10 lakhs. For that the entry will utilize capital reduction. So capital reduction account debit to plant and machinery account 10 lakhs. Okay, capital reduction account debit to plant and machinery account 10 lakhs. We are utilizing the capital reduction account to write off plant and machinery. For writing off the assets, the entry is capital reduction account debit to assets account, being plant and machinery written off. Okay, being plant and machinery written off. Now capital reduction account debit. So in capital reduction account, we will write on debit side opposite account to plant and machinery account 10 lakhs. Next, a call of rupees 5 per preference share was made, and this was duly paid by all the preference shareholders. We have seen that face value is not changed in case of preference shares, only paid up value is changed. So that remaining 5 rupees company has again called from preference shareholders. So two entries will be passed. First, for making the call, preference share call account debit. Okay, for making the call, preference share call account debit to 12% preference share capital account. Okay, this we have studied in standard 12 and second year BCom also. Share call to share capital and then bank to share call for receiving the money. There are total 1,50,000 preference shares and 5 rupees is called. So 1,50,000 into 5, 7,50,000. Okay, 1,50,000 into 5, 7,50,000. Being call money due. Now we will pass the entry for receiving it. So bank account debit to preference share call account 7,50,000. Okay, bank account debit to preference share call account and amount 7,50,000. Being call money received. Now, this will have no effect on capital reduction. 6th and 7th entries don't have any capital reduction account. 6th, creditors are given option to either accept 50% of their claim in cash in full settlement or to convert their claim into equity shares of rupees 5 each. Two options are given. Either you take 50% money in cash and leave the company, or you convert the claim into equity shares of rupees 5 each. Okay, equity shares of 5 each means they are of 10 rupees and reduced to 5 rupees. So whatever amount is there, that will be converted into equity shares of 5, but they'll have to remain with the company. Now creditors for rupees 5 lakhs opted for shares in satisfaction of their claims. So it's quite obvious that remaining creditors have taken cash. Okay, two options are there. First option is of cash, second option is of shares. 5 lakh of creditors are going in for second option, that is shares, means remaining creditors are going in for the first option, that is cash. Now how much are creditors? 15 lakhs. So out of that, 5 lakhs are going in for the shares option, means they are taking equity shares, and 10 lakh of creditors remaining, 15 lakhs minus 5 lakhs, they are going for cash option. Okay, 5 lakh of creditors are going for shares option, as it is given rupees 5 lakhs opted for shares in satisfaction of their claims. So that means the remaining 10 lakh of creditors are going in for cash option. Now here what is the option? 50% amount only we will pay in cash. See the adjustment. Creditors are given option to either accept 50% of their claim in cash, not full amount, 50%. So out of 10 lakhs, 50%, 5 lakhs only we will pay them in cash, and remaining 50%, and that is in full settlement. 50% claim in cash in full settlement, that means they have to sacrifice remaining 50%, 5 lakhs, that will be transferred to capital reduction account. Okay, and equity shares means 5 lakhs full value we convert into equity shares, but then equity shares means they'll get the money in future only whenever the company goes into liquidation, otherwise they cannot get that money. So I repeat it once again, look at the whole adjustment once again. Creditors are given option to either accept 50% of their claim in cash in full settlement or to convert their claim into equity shares of rupees 5 each. Now creditors for rupees 5 lakhs have opted for shares. in satisfaction of their claims, means remaining creditors have gone in for cash option. Total creditors are 15 lakhs. 5 lakhs have opted for shares option, means remaining 10 lakhs have opted for cash option. Now what is the cash option? Only 50% money we pay in cash in full settlement, means remaining 50%, 5 lakhs, they have to transfer to capital reduction. They are going to sacrifice that. So what entry will we pass for this? First of all, creditors are the receiver, debit the receiver, creditors account debit, or you can say creditors have credit balance, to close them with reverse and debit them with full amount 15 lakhs. Now how many creditors have gone in for shares option? 5 lakhs. So to equity share capital account, okay, to equity share capital account 5 lakhs, and they have gone in for shares of 5 rupees, means 5 lakhs divided by 5, we are giving them 1 lakh equity shares. Okay, 5 lakhs divided by 5, we are giving them 1 lakh equity shares, just for understanding. Okay, just for understanding, we are giving them 1 lakh equity shares, but amount is converted into equity share capital. And remaining to cash and bank account, out of remaining 10 lakhs, only 50% we are going to pay in cash in full settlement, that is 5 lakhs as we discussed, and remaining 5 lakhs, what they sacrifice in full settlement, will be transferred to capital reduction account. So to capital reduction account with remaining amount of 5 lakhs. Okay, I repeat it. Creditors account we will debit with full 15 lakhs, to equity share capital 5 lakhs, to cash and bank 5 lakhs, to capital reduction 5 lakhs. I hope everyone is clear with this. To capital reduction account means in capital reduction we will write on credit side, by creditors account what they sacrifice, 5 lakh rupees. Okay, by creditors account 5 lakh. Next, being creditors settled. Okay, being creditors settled. Now next entry, entry number 9. Reconstruction expenses 75,000. So capital reduction account debit. Okay, reconstruction expenses are expenses, debit all expenses and losses. Will directly debit capital reduction account to pay for these expenses 75,000, and bank is the giver, credit the giver to cash and bank account, or simply bank account 75,000. Being reconstruction expenses paid. Okay, being reconstruction expenses paid. Now capital reduction account debit. So in capital reduction we will write on debit side, to bank account 75,000. Now the last one, goodwill and profit and loss account are to be written off. So goodwill is how much? 3 lakhs, and profit and loss account is 26 lakh 40,000. So for writing of goodwill and profit and loss account, capital reduction account debit. Okay, for writing of the assets and losses we are utilizing capital reduction. So capital reduction account debit to goodwill account. Okay, to goodwill account, whatever assets are written off, that is 3 lakhs. To profit and loss account 26 lakh 40,000. Okay, to profit and loss account 26 lakh 40,000. Now in capital reduction account we'll write this first on the debit side. Okay, first we'll do the recording, because if any surplus remains we have to transfer it to capital reserve. So first we'll do the recording and find the surplus and combine in this entry only. So capital reduction on debit side to goodwill account 3 lakhs, and To profit and loss account 26,40,000. And now if at all any balancing surplus remains in capital reduction account, we need to transfer it to capital reserve. So let us see that. First we'll do credit side total 22, 50, 30, 32 plus 10, 42 lakh 40,000. All of you see in calculator, does the credit side total come to 42 lakh 40,000 or not? Now from that we'll minus 26, 29, 39, 40 lakh 15,000. So 2 lakh 25,000 will remain. To capital reserve account in bracket balancing figure. Okay, to capital reserve account in bracket balancing figure. So 42 lakh 40,000 minus 10 lakhs 75,000 3 lakhs and 26 lakh 40,000 remaining 2 lakh 25,000. We'll combine in this entry itself. To capital reserve account 2 lakh 25,000. Now 26, 29, 31 lakh 65,000. Being Goodwill and P&L account written off. Okay, being Goodwill and P&L account written off. Now final total is to be done. 45, 60, 62, 67, 87, 77, 40 plus 15, 87, 92, 40, 107, 40, 107 plus 31, 138, 139, 80. 1 crore 39 lakh 80,000. I may be wrong, I've done it orally only. So all of you do it in calculator and just verify that. Is it right or not? Okay. 1 crore 39 lakh 80,000. Now balance sheet is not asked in this question, so it becomes short and simple. This much is only to be done. If this type of question comes in your exams, good luck for you. Okay. Chalo, bye now. We'll meet in the next lecture. Bye everyone. Take care. See you in the next lecture.